Hey, good morning, traders. Today is Friday, July 22nd, 2016, and we're doing a trade recap video preview for next week. I'll talk about some of the trades that took this week. I want to start first on the daily chart. We have come ever so close to the negative 23% target, that being the long 2003 up to 2175s, and indicative of that is the sideways price action that we started to see this week. Really a very choppy week, not a ton of opportunity, but after these kind of consolidation weeks, we typically see some good price action. So looking for a good week next week. Going into August, August is definitely a month to be cautious of for whatever reason, whether it's traders being on holiday, people getting those last minute vacations in before the kids go back to school. August is just a very crummy month for trading, so be very cautious as we go into August. But let's take a look at the 5-minute chart. On Tuesday's live trading, we kind of did a little recap already of Monday's trade, and we did have, while it was a big body candle, there was a break above the high of the low bar here, and then you were able to trail your stop all the way up until getting taken out over here. And the reason that we're able to stay in the trade through this kind of chop here is all of these bars are inside bars relative to this candle here. And that's important because when we get in these scenarios, come on, where we have a big body candle and then we have an inside bar or multiple inside bars, there's not a lot of follow through as long as we're within the high and low of the main candle. So I wait till we get a breakout of that main big body candle before moving my stop up again. So Monday was a good day. There have been a handful of trades here that have not been quite as smooth as that. On Tuesday morning, as you saw in the live trading, if you were tuned in, the recording is also in the VIP dashboard. It was pretty choppy, pretty nasty. If we look at the first 30-minute range, we basically stayed in that all morning, at least during the, basically all day, and especially during the live trading session. Now, when we establish a range on the day, and we can identify the first 30-minute high and then mark the first 30-minute low. When we do break out of that range, then two things are either going to happen. We're going to break out and stay out, or we're going to break out and come back in. Now, the context for this day, if we go to the daily chart, so here's Friday, and then basically Monday, Tuesday are both inside days, inside to Friday, seeing as the high and low were contained within Friday's high and low. And that can be a pretty dangerous situation. So it's even more important to be able to identify the first 30-minute range. And so if we're in an inside day, inside the first 30-minute range, as I was talking about Tuesday, there's not a whole lot that can be done because there's not a whole lot that's presenting itself. But one opportunity that you can take advantage of when we're in these tight range-bound days, is looking to fade the top of the range or the bottom of the range, and you'll see how we, kind of broke through, but then immediately pulled back and traded back down to the bottom of the range, and then after sitting down at the bottom of the range, kind of moved up to the top of the range. So either a sit on hands day when we're inside like that, or looking for moves from the top to the bottom, or the bottom back up to the top. Now on Wednesday was very similar to Monday. Just looking at the difference from Tuesday, blah, very choppy, sideways, to Wednesday, where you can see how when you mark the first 30-minute range, there's a clear trend within that range, down, up, and then boom, off to the races after that, break out and stay out. So, it's even though you have to take some cues to identify these things as they're happening, 1, 2, 3 candles down and then all green candles on the way up, at least in the first 30-minute range, totally different than Tuesday, where it's red, green, and the most obvious factor to look at are these opposing tails, where the bulls step in and start the day off, and the bears push and give it all back. And then undecision bar, and then just constantly back and forth, back and forth. Very dangerous market condition. Not a whole lot of opportunity there. But now on Wednesday, we had an opportunity to get a long above the high of the low bar down here, but trailing every candle's low was a little bit challenging because we had a couple dips below the previous candle's low, so then you get shaken out. And so the way to combat that, especially in the summer months, because the ranges are a little bit smaller, you can be, a little bit more conservative and trail every swing low. So let the market start to go in your favor. Let the little pullback occur and let it break out or make a new high, and then move your stop underneath the next swing low, and then continue. The market goes higher once again. Let the market pull back and make a new high, and then trail the next swing low. And I know that there's a lot of distance between the swing lows sometimes, but if you look at the reward to risk, you're talking about maybe getting chopped up early on versus a 2160 taking you up into a 2165, 2168. So the difference between having a break even or a small trade that goes nowhere, and the difference of 5, 6, 7, 8 points by being just a little bit more conservative. And then if you are a little bit more conservative, you're also not taking as many trades. Thus, sometimes if you get chopped up in a trade, let's say down here for instance, if you were to trade every candle's low and get taken out, and then up here be looking for a short, now you're taking 2 trades, and then the short only has a little bit of momentum before reversing. So by being a little bit more conservative in the summertime, the opportunity is greater for the reward to risk, and you end up with less trades and more trades on the winning side. So there's a lot of positives, but you kind of have to look at the market conditions. And when I see things like this, where we're just sideways, nastiness, choppiness, that's when I'm more conservative with my trail stop versus, if we continue in this kind of environment, even though we pulled back a little bit and we're chopped up, if we see more days, let's say we see Wednesday, Thursday, Friday, and we have nice trends like this, then I'm more then I lean more towards being a little bit more aggressive with my trail stop. The other approach that you can take is kind of a combination of the two, because at the beginning of the trade is when typically you're going to get chopped up. And so if you're a little bit more conservative at the start, using a -6 even, which is fairly aggressive stop placement on the ES. But if you start with a -6 stop and then begin by trailing swings, and then once we actually break out, so like up here, let's say you started with your stop at -6, we started to move higher, got a little bit of a pullback, moved higher again, so your stop is underneath the first swing low. Once we break out, pull back, and then start to go higher again, then you can start trailing every 5-minute bar with the thought that, okay, the market has already broken out, so I want to lock in profits near the top, and rather than waiting for the pullback and waiting to see if there's going to be another leg higher. So that's kind of a variation on the two. But again, August, summertime, being a little bit more conservative is okay. Now, if we look at today, same kind of thing as we saw on Tuesday, very choppy, nasty morning. The difference today was that we had a very nice, so we had the low and the high established, which we can mark. And then we had a higher low, lower high, higher low. So a nice triangle formation forming. Now, not much to do back in this region. You know, you could have tried for a short right off the open, and it traded down a little bit, ended up getting taken out for, break even. So no harm, no foul there. And you'll notice with this style of trading that, your losers end up being very, very small, especially relative to the winners. Now over here, we can start to see a break out of the triangle, and that triangle being like that. So we moved above this swing over here, but then we put in we put in a higher low, and then we put in a lower high. So, a little bit of fake out this morning, and tough to, be able to foresee a bigger move like this coming, especially when, we're in a triangle and then we start breaking out to the upside. You can draw an uptrend like so, and looking for, a potential shorting opportunity below that. But being Friday and being that we were stuck within the first 30-minute range, no big deal to kind of close down early and get into the weekend. Summertime again, and there's no reason to end Friday on a bad note. So don't feel bad if you were not able to get in any trades on Friday. And I think another really important thing on Thursday, rather, on Friday, another really important thing is that it's not about the number of trades that you make. It's more about the quality of the trades. So we're not trying to make as many trades as we can in a day and rack up commission. It's more about placing quality trades. And so, as I was talking about the setup right here in the first 30-minute range, Friday actually was almost identical in terms of the consolidation, very back and forth, choppy. So again, there's opportunities, but you have to be focused and selective, and it's important to stay patient, especially when we get in these environments where we're up near highs, we're within, a lot of times within this range. Even though we've popped out of it, we drop right back down to it, and you can see the daily bars spinning top, tighter ranges in the daily. A much more challenging environment to trade versus these days where we have big body candles. So be patient and be focused. Better to trade just a small window and then shut it down versus looking at the markets all day long, especially in the summer, and getting chopped up. Take a break, get outside, go do something fun. So we will talk to you next week, and we'll be looking for maybe a little bit of a move higher to the 2175 or break through that. But then once we do start to pull back, we can draw up the next fib retracement and look for a pullback, maybe some towards the top of this range right in here. The 2100 level would be a nice place to bounce back to. And if we do get a rollover like that, you'll have a lot of panic and news saying, oh, the rally's over and this and that. But really, we're still bullish, and there's still a lot of upside potential, even with the pullback like that. So we will talk to you next week. I hope you all have a great weekend. Feel free to shoot me an email, tim@emoneymind.com, and we can chat more. Thanks. Talk to you soon.